All right, let's get this week going. Good morning, everybody. Gary, nice job, man, getting that work in, right? Uh-oh, here comes John. I like it. Good morning, everybody. Jim K, Safia, Gary, it's great to have you guys here. Hope everybody had a great weekend. Gary, there's one truth that I have seen in my time with Nexgen. Hey, Ron, I know it's you, even behind the mask. Um, Good morning, Chris T, Bobby T. Everybody follows a plan until they don't, right? Was it Mike Tyson that said everybody has a plan until they get hit, until they take a loser? Um, Guys, repetition is the key. Repetition over and over, muscle memory, getting in. And then one of the hardest things to do until they get punched in the face. That's it, 10,000 hours. But Gary, you're taking the right path, right? You've done the study, you've taken the pictures, you've participated in class, you're using a spreadsheet, you've proven to yourself that you can win taking the correct trades, and now you're using Apex. Now you're using that prop fund rather than risking $5, $10, $20,000 of your own money. You're going through for that small price to prove to yourself that all your hard work is a plan that you can stick to. And Gary, you are on the perfect path, my friend. Just keep that checklist going and stay focused on the checklist. Don't make things up. Yeah, and then there's the best read ever. It was written by someone else 25 years ago, still true today. And I put a little excerpt from that in the room earlier today. And that's a big one. Guys, happy Monday. We're going to get into this week, and we're going to do what we did last week. Last week was amazing. The participation levels in this room were off the charts. The pictures that we saw, but more importantly, you guys, demos, man, y'all were asking some of the best questions ever. You were asking those questions that everybody's wondering, but no one had the courage to say. So let's keep that trend going this week. If it pops into your head and you need an answer, I want you to put it in the room, guys. This is your class. It's a 3-hour discussion, not a 3-hour lecture. And we're going to treat it as such. But before we do anything, every morning, guys, we're looking at forexfactory.com. We're looking at your chosen news source, and we're looking to see what sort of news is coming up, what has the potential to move the market a little erratically, to make it spike, to make it bounce. At 8:30 a.m., we had core durable goods orders. That was a medium impact. Had the potential to move the market. It was enough to break the S&P out of its range. And then at 10 a.m., we have pending home sales. Once again, a medium impact. Has the potential to move that market. Always be aware. I like to put a little note on a piece of paper or use my phone for a reminder when it's coming. And that's the first thing that I look at every day. Whoops. And then I just closed out everything. And then the next thing I do is, well, I take you guys over here to the education page. Hey, good morning, Christina. Nice to see you this morning. Guys, and there's two places where the education page actually there's three. The first place is a software user guide. If you're brand new to NinjaTrader, click through this section. Just go through, look at each heading, click on every subtitle, because this is kind of your NinjaTrader how-to, whether it's connecting or scaling charts, putting in stops and targets. All those simple little processes that are brand new to you are covered in detail. Anything and everything that you could hope for. And then, of course, if you don't find your answer, raise your hand in class. If I can't give you the answer, I'm going to send you to somebody who can. And then we have the tutorial section. And guys, this is where the magic happens. Anything and everything that I talk about to you guys comes from this tutorial section. And I think it's important to note that when you look at the URL, it says building a foundation. And that's exactly what you're doing, is you're building a foundation. You're creating a base of knowledge that you will expand from, that you'll grow from, that you will get better and better as you grow. So in the spirit of foundational learning, guys, I want you to focus on keeping it simple. I want you to focus on allowing yourself to be new. And I think one of the pitfalls that new users have, myself included, I am raising my hand, is we understand that there's a lot to learn coming in, but because of our personalities, I don't know about you guys, but I did pretty well in my chosen profession. And I was accustomed to being the person with the answers. I was accustomed to being the person that reacted well under pressure because of the repetition and the time that I'd put into my career. And a lot of you are going to be in that same thing. You've been exceptional your whole life because you put the time in to learn something. Remember that time clock starts over. This is a brand new something. This is a brand new career for you. It's a new educational process. So let's stay very, very focused. Give yourself 20 trading days, 30 days of study, and focus on the 5-1 trend trades. Focus on the high probability trend trades. And there's a couple reasons. And the first reason is just because in the definition, I get a lot of warm fuzzies when I think about a trade where each indicator, every chart agrees with the rules for the trade. Guys, this is when the triggers are the strongest. There's no termination conditions. You've got room to your target. This is the best of the best, guys. And this high probability trade that we're going to cover this morning is a trade that typically wins 70 to 80% of the time when you take it. So on top of taking this trade where everything agrees, you get that dopamine kick. You get that creation of confidence through success. And this high probability trade is our first 20 days, because if you really focus on it and you tell yourself, all right, this is my basic, this is my foundation, what you're really going to do is you're going to begin your progress towards what should be your ultimate goal, and that's to be a chart reader. Because 90% of what we do here is just reading the charts. 90% of what goes on during a day is looking for advantages, waiting for those rules to be met to get you into a trade. Because chart reading, which you're going to develop from 30 days of focusing on high probability trend trades, is going to incorporate 3 essential elements. You're going to be able to look at your indicators and understand where the market is likely to continue, where it's likely to go, and where it's likely to stop. You'll use these likely to continue points for entries for that high probability trend trade. You'll use these likely to go areas, making intelligent choices on profit targets. And then you'll use this likely to stop when you're going to be able to recognize through Fibonacci, through trigger lines, when the market trend has the potential to end, and you won't be taking trades into these areas. And that likely to stop area is going to keep you out of an awful lot of losers. So give me a Y in the room if you're with me. You're brand new. You're going to allow it to be simple. Let's stay focused, guys. Let's stay focused on 3 simple rules. We're going to focus on understanding the equation that gets you into a trade. And a trade is nothing more than momentum and a clear path in an entry area. And guys, these are advantages. These are advantages that make your life as a trader easier, but it's your life as a chart reader that's going to have you recognize them. And we're only going to use 2 charts to find these 3 rules. Good morning, Cornelio. We're going to use a 13-2 chart to get that broad stroke, that temperature of the market, give us an idea of what's happening on the broad scale. And we're going to use 1 bar on the 13-2. And with that 1 bar, you're going to be able to recognize an awful lot of things. You will understand the trend of the market. If the background of the market is green, if that 13-2 is green, well, then we're in an uptrend. And we're only looking for rules to be met for high probability trend trades long. If the background is red, we're in a downtrend, and you're only looking for rules to be met for high probability trend trade short. Guys, trading with the trend is really the first advantage that you're going to give yourself. You're also going to be able to recognize rules 1 and 2. There's only 3. Rules 1 and 2 are met on the 13-2 chart, and these 2 rules are going to give you the advantage of momentum as well as the advantage of a clear path. And this broad stroke of the brush is what's going to give you the information that you need to look for an entry, and that's when you're going to turn your attention to the 5-1, the smaller, faster chart. And this is going to be your entry chart. You're going to refine that broad stroke of a brush, and you're going to pinpoint that area where the market is likely to continue, and that's rule number 3. We're going to pinpoint it with such accuracy that you'll use a limit order to buy or sell a pullback right at an area inside of favorable large triggers. This is going to allow you to reduce your risk and to maximize your profit potential. And guys, I built a picture of that refinement process. This one bar on a 13-2 chart, these are the two charts together. All of these bars are coming about on the 5-1. When this one bar tells us that we're in a downtrend, when this one bar tells us that we have odds favorable momentum, when this one bar tells us that there's nothing in our way, we come over here and we use these 20 to 30 bars to refine that entry point to the best of the best spot to get into the market at the area where it's likely to continue. So we're going to do a quick review. What are the rules? Remember, let me give you the picture so you can hang on to it. You can add this to your collection of pictures that I'm sure you've already started. 3 rules. On the 13-2 chart, we must have strong trigger lines. On the 13-2 chart, we must have no termination conditions. And on the 5-1 chart, we're going to use a limit order to buy or sell an area right there at the triggers. And that's your equation: momentum, clear path, and entry area. So let's define momentum. When the background is green on your 13-2, when we're in an uptrend, you're going to recognize momentum through the T3 trigger lines. When the small triggers are up above the large triggers are widening. They're angled in the direction of the trend. It's the space between the two. It's that gap between the small and the large that lets you know that the odds are favorable for the market to continue up. And you're going to hear me say this in the room a lot. Did you have odds favorable momentum? And you'll see people annotating their charts. You'll see me writing on charts, OFM, odds favorable momentum. In a downtrend, the small trigger lines break below the large trigger lines. The large trigger lines are wide. They're angled in the direction of the trend. It's that space created between small and large that lets you know that the odds are favorable for the market to continue down. So this is your best look. This is what gets the process going, looking for that high probability trend trade. And we're going to commit to this odds favorable momentum because as the small return to the large, they work themselves inside. This is a weakening of the large triggers. And when you weaken those large triggers, anything can happen, up or down. So remember, rules have to be about advantages. The advantages of odds favorable as opposed to the disadvantage of anything can happen. Give me a Y in the room. New users, demos, old users, people looking to get their stuff together. Odds favorable momentum is the first advantage that you're going to give yourself. Fantastic. Now, guys, you have to believe that odds favorable momentum doesn't happen every second of every day, right? How could it? The market would just rail away one direction for the rest of its life. So we're going to look for that opportunity from when the point they break away from the large until they return. When we go back and we study odds favorable momentum, when you're looking to recognize these potential trades, guys, when you have that momentum, you're going to see these tails. And these tails form after the fact. But these tails become potential entries on the 5-1 chart, on that refinement chart. So get your eyes trained as you scroll back through the market, identifying odds favorable momentum and looking for these tails because they're potential entries. And if we go to a chart right now, the S&P has obviously been in a pretty good run. If I put nothing more than trigger lines on this chart, we're going to take a look and see if we can identify some of those points where the small break away from the large until the point when they return. Is everybody with me on this? I have odds favorable momentum. What I also have right here is one of those potential entries on my 5-1 chart, guys. When the small triggers return inside and I lose that momentum, I'm not concerned about those potential pullbacks because those pullbacks no longer have odds favorable momentum. You see it again? You can circle here even in the middle of the night at midnight. The momentum can be favorable. As the small triggers return, Guys, that's your last, whoops, that's your last potential opportunity with those trigger lines. Good morning, KR. If I scroll back just a little bit more, my smalls are still outside. They're trying to return, but they can't. And I'm just going to circle a tail. You can go back and you can do this over 10 days of historical data, going back looking for the opportunities in the market. And you're going to identify, well, that odds favorable momentum isn't something that happens every second of every day. That's going to teach you patience. And you're also just going to get recognition. You're going to be able to see when the market is trending its strongest, when we have that advantage, and when the market begins to weaken and that advantage goes away. So odds favorable momentum. And then we're going to couple it right off of the large chart and make sure that there are no termination conditions, that we have the advantage of a clear path. Termination conditions are those areas likely to stop the market, right? So when we talk about termination conditions, let me get the picture for you. It's a simple comparison of areas to trigger lines. These are the areas that have the potential to stop the market. These are the areas that may reverse the market, and it's based on a comparison, guys. It can be red Fibonacci resistance, blue Fibonacci support. It can be the cyan divergence low or this magenta divergence high. It could also be one-to-ones, and in some cases it can be a mid-band if your large triggers remain a full bar away. But there's a simple comparison that's going to allow you to identify whether or not an area is likely to stop the market. And it starts with price reaching the area. When price reaches, in this instance, Fibonacci support, check your trigger lines, those same trigger lines that define momentum. If none of them are below that area of support, don't take any more trades. Not into that area of support because it's likely to stop the market. And you'll see this happen over and over. Price reaches an area of resistance. You have to ask yourself, where are the T3 trigger lines? If they all remain below that area of resistance, this is an area that may stop the market. No more long trades. And price comes all the way back to support. Well, when price reaches support, the trigger lines remain above. If the trigger lines remain above, no trades into support. Guys, can't go long, can't go short. Do you remember that 90% of what we do is waiting for the advantages? 90% is reading our charts and waiting for our charts to tell us that we have that advantage. Price pulls all the way back up to resistance, guys. It hits resistance, a divergence high, and a second resistance. Not one of those trigger lines breaks through. This area of resistance is likely to stop the market. This area of resistance creates a full reversal and gives me odds favorable momentum to the downside. This is what I call a strong top. A termination condition that creates a full reversal is a strong top. A termination condition, price reaches one-to-ones, trigger lines remain above, that creates a full reversal. Large triggers change colors, they pinch, they roll, and then gives me odds favorable momentum. This is what I call a strong bottom, guys, and your best chance of success as a brand new user is focusing on those 5-1 trend trades that happen after a termination condition. Notice the circle, smalls above the large. There's a potential entry after a termination that creates a full reversal. Give me a Y in the room if you're with me, guys. We're going through this a little bit quick this morning. I want to get to the live market and look at some stuff. I want to look at the charts that you guys post. But this is an important concept to remember. No trades in an area is likely to stop the market because it removes your advantage of a clear path. Sometimes the market will turn from seemingly nowhere. Sometimes your trigger lines will break an area, but price won't reach the next area. Sometimes you'll have odds favorable momentum and that market will seem to just turn out of nowhere. Guys, this is the only termination condition I'm going to show you that you'll be able to recognize on a smaller, faster chart before you see it on a 13-2. Your smaller, faster chart, your refinement chart, can let you know when those turns are happening. From a low, 3 divergence in the same price range may terminate the trend. The same is true from a high. This is very powerful when your small trigger lines on your 5-1 go from odds favorable to anything can happen. Same is true from a top. So 3 divergence may terminate. Those 3 divergences are more powerful when your trigger lines identify a loss of momentum. And then it's more powerful still for you guys that love patterns when that third divergence is higher than the previous from a low or lower than the previous from a high. It's that head and shoulders pattern. Guys, you're going to see this look. I want you to burn this in your head real quick. 3 divergences from a low, 3 divergences from a high, and you're using that look on your smaller, faster chart to help you identify the change that may be happening on the 13-2. The other advantage of being able to recognize these termination conditions, guys, is remember I said 30 days. That's it. That's all I'm asking. 30 days to keep it as simple as you possibly can, to have as many advantages as you possibly can, to learn to read your indicators. Your ability to recognize a high probability trend trade is going to open the doors for you to do so much with the Nexgen software. And the first thing you're going to see is a medium probability trade, when most of your indicators line up for a trade. And this is going to be the vast majority of your trades, but notice that it says a small issue exists. It doesn't say multiple issues exist. It says a small issue exists. And when you execute medium probability trades, you'll take these trades and manage them assertively. If there's trouble in your way, your chart reading will identify it. You can take a portion of your position off. Your chart reading is going to identify that small issue. Guys, I want you to understand that the high probability takes you to the medium probability, because in order to manage a trade assertively, to identify trouble, you need to be able to read your indicators. So from that medium probability trade, you'll take what you understand about small chart divergence and put yourself in a position to be able to manage. If you're in a short position and there's a small issue, you'll be able to identify that small issue. You'll be able to identify losses of momentum to manage assertively. Allowing yourself to be new, to learn how to read your indicators. Good morning, new trader. Is going to have all of this happening in the moment, almost instantaneous for you once you get the reps and once you go in. So let's go back to that S&P market and let's put some indicators on there. Hey, good morning, Cal. And you're exactly right, Ron. It's hard to avoid trouble if you don't know what it looks like. Let's go to our first circle. Small's above the large are wide, they're angled in the direction of the trend. My small triggers have broken through an area, but my large triggers have not yet. Guys, this is your first medium probability trade. This is a trade that with that odds favorable momentum, these 1-to-1s have the potential to break, but they're not completely broken. How do I know an area is completely broken? We're going to use that same trigger line comparison, guys. We'll use the stamps. Trigger lines reach the area. Absolutely no trigger lines break through. No trades into that direction, guys. This is an area likely to stop the market. The same is true up top. When price reaches this area of support, no trigger lines have broken through yet. This is an area likely to stop the market. An area is considered broken when both the small and the large triggers get to the other side. Small triggers break through, large triggers break through. Now I have the advantage of a clear path. And if I have odds favorable momentum, it's time to look for a trade. Is everybody with me on that? No triggers, area may reverse the market. Both the small and the large triggers, we consider the area to be broken. You'll notice that Fibonacci support begins to act as Fibonacci resistance. And the guys, I'm going to introduce you to your first medium probability trade. When your small trigger lines break through an area, when your large trigger lines remain above or below that area, 50% of your trigger lines are through, 50% are not, right? So because some days we lack creativity, guys, this is a 50-50 trade. This is a medium probability trade. Your small issue is that this area hasn't broken, but has the potential to break with that odds favorable momentum. All the trigger lines are through, this area is broken. Only the smalls are through with odds favorable momentum. The area hasn't broken, right? But with that odds favorable momentum, those strong triggers break things. It has the potential to break. If you take this medium probability trend trade with an area not broken yet, let your entry on the 5-1 be perfect. Guys, this isn't a gospel truth. This is for brand new users. Until you learn to read your indicators to be able to manage in the moment, if you have an area with the potential to break but it hasn't broken yet, let your entry on the 5-1 be perfect. Let it be absent of any divergences, any of those losses of momentum. Make sure that it's sharing that strong trigger look, the one that got you looking for the trade in the first place. Guys, this is your first medium probability trade, and you're going to see these a lot. And I bring that up because there's one right there. The smalls have broken through, but the large have not. And if we go back to the next circle, guys, price reached resistance right here, right? Notice how none of my trigger lines have broken through that area. I've reached resistance. They've remained below. Give me a Y if you see it. That's a textbook termination condition. I'm going to remove that circle. I'm not going to trade into an area likely to stop the market. But when those smalls get above, they're still outside of the large are smashing through, well then there's a medium probability opportunity. Remember when we said this will be the vast majority of your trades, right? Medium probability. One small issue exists. So how do we get into the market in a medium probability scenario? Well, we're going to refine the broad stroke of a brush, right? We are going to identify that point where the market is likely to continue. I'm going to take a sip of water. During the live market, guys, this is going to be the look on your 5-1 when the 13-2 rules are met, when you have strong trigger lines, when you have no termination conditions. Guys, your 5-1 is going to be strong to the upside. Nothing but green up bars. Your 5-1 large triggers should be strong, one on top of the other, large and synthetic, angled up like a shark preparing to breach. You're going to focus your attention on these strong triggers, and all you're going to do is look for the areas that fall within, or that are falling within as they come up. Our rules say that we're going to use a limit order, meaning that we're going to let the market come to us. We're not going to chase price. And we're going to use that limit order in an uptrend to buy a pullback at an area. Areas can be fibs, they can be mid bands, they can be 1-to-1s. It can be any combination of the three. But those areas, and here's the kicker, guys, we want to see them inside of those favorable large triggers. We want to see them inside of trigger lines that are trending one on top of the other. Because when they do, this gives us our best chance of success. We're going to be able to identify that area where the market is likely to continue. If I'm going to buy a pullback is just a small retracement in price. And I love this picture. John Novak put this together for me. My 13-2 chart says that I have momentum. My 13-2 chart says that I have a clear path. The 13-2 chart reflects the mentality of the crowd, the big group of people that are moving that market. There's always a small group of people that want to fight, right? The small group of people that says, I get it, guys. You've got momentum. There's nothing in your way, but we sure do want it to go down. We need these people because they give us our pullback to the best of the best area. This small crowd is who forces the pullback, who forces that small retracement in price. And guys, that pullback begins with a reversal bar. After all of those green bars, we're waiting for the first red bar to say that small crowd is giving us a push. This is where you're going to create your window of opportunity. And your window of opportunity is going to extend from your highest point of support to your lowest point of support. And the key is that they need to be inside of those favorable large triggers. So from this mid band down to these 1-to-1s. As these large triggers come up, these are moving averages. If that mid band is a tick or two, the triggers are going to come up. Guys, we can identify where the market is likely to continue, and you can right click and activate a limit order right at the top of that window of opportunity. And this becomes your entry point for a high probability trend trade. And if the market pulls back to the top of that window, to that highest point of support inside of favorable large triggers, you're in a long trade at this point. You have bought the market, and your anticipation is the market will continue up. Give me a Y in the room if you're with me. Wait for the reversal bar. Create your window of opportunity, and just wait for that market to come back to you. Guys, you don't control whether or not the market comes back. Good morning, Zeba. The only thing that you are in control of is the identification of the advantages, making sure that your rules are met 100% so that you can enter this trade on a limit order with the advantage of momentum, so that you can enter this trade with the advantage of a clear path, and you've entered this trade with the advantage of getting in where the market is most likely to continue. Your protective stop will go below the 1-to-1s, below those large triggers. Guys, this is where the market shouldn't go, right? If this trade is going to be a winner with all those advantages, dollars to donuts, more often than not, it's going to go from that window of opportunity. If price exceeds the window, well, we no longer want to be in that trade. We have a predetermined risk based on the window. Guys, I'll take this trade 1,000 out of 1,000 times without hesitation, without fear, without anxiety, because this is a trade that typically wins 70 to 80% of the time. I'm going to say that one more time, and I want you guys to listen carefully. This is a trade that typically wins 70 to 80% of the time. How many times, ready? This is your math problem for the day. How many times is this trade likely to lose with the advantage of momentum, with the advantage of a clear path, with the advantage of having entered at the area where the market is likely to continue? 20 to 30%. New trader, if you lose one of these trades, does it mean you're a bad trader? No, it's only one trade. It doesn't necessarily mean that you did something wrong. It means that there's a cost of business associated with being a day trader, guys. And their normal losses are a natural part of a positive equity curve. You have to be okay with that. You have to trust your rules to a point that when this sets up, when you have all of these advantages in place, let me find my picture. When you have odds favorable momentum, when you have no termination conditions, when you get a pullback to an area inside of favorable large triggers, guys, you've followed the rules, right? You've taken the trade. You know you have the advantages. You have to be okay with whatever the outcome is. If not, you're going to drive yourself mad. I take losers every day I trade, guys. And the only thing that I'm really concerned about, the only thing where I judge my success is whether or not I was able to follow my checklist that clearly identifies the advantages, my checklist that lets me know that they were in place, the checklist that has to be fulfilled 100% for me to enter a trade. And if I do, I don't care about the result. And I know that that sounds kind of, ooh, I bet he does. I bet he hates to lose. I don't. I used to. When I didn't trust the rules, I hated to lose, guys. But now that I trust my rules, now that I know that every time this checklist is met, I have an advantage. And I know, because I've studied, because I've practiced, because I've taken the pictures, because I've participated, that this is a trade that wins more than it loses. Give me a Y in the room. Guys, that's a big thing. I put those silly little stats in here. I don't know if you guys saw it towards the beginning of the day. I'm going to go back and read them. Outfielder Ty Cobb, whose career ended in 1928, has the highest batting average in Major League history. 366, guys. .366. Less than 40% of the time, he didn't get a hit. Or like 60% of the time plus, he didn't get a hit. A third of the times at bat, he got a hit. 1/3. Highest career batting average ever. Serena Williams only won 85% of her matches. On the PGA, they only get greens in regulation about 65% of the time. Stop putting the pressure on yourself to be perfect, guys. Stop deciding that every trade has to be a winner, because it doesn't. Every trade has to be executed properly. That should be your goal, and that's why you're on Simulator. And that's why you're posting in the room, and that's why you're asking questions, because your job isn't to be the perfect trader, to never lose. Your job is to be able to execute these rules 100%. And if a trade follows the rules, if you had every advantage in place, I want you to embrace this magical word, next. Hey, market, give me my next opportunity so that I can follow the rules and take the trade. All right, there's my soapbox. There's my psychological morning this morning. I want you guys to read this. During the break, it'll take you 3 minutes. John gave you the large version. John gave you the actual book, the PDF book. Guys, this is an excerpt, just a little bit. Download it, read it later in your own time. You'll be good. But it reminds you that it's about execution, not about victory. All right. Where are we at? So we've got rules. We've got odds favorable. We have no terminations. Everything says up or everything says down. What do we think, guys? Smalls below the large are wide. They're angled in the direction of the trend. Is rule number 1 met on this 13-2 chart? Do I have odds favorable momentum? Especially you new users. Give me a yes or a no. Should we freeze frame it? Let's freeze frame it so that we can do our analysis at our own pace. What do we think, guys? Odds favorable? D says yes. Joel, yep. Ron says uh-huh. New trader says yes, absolutely. Smalls below the large. Look at this momentum, guys. The odds are favorable for this market to continue down. Have we reached that blue line? Have we made it to Fibonacci support yet? No. Perfect. But guys, look at this Fibonacci area right here. My small triggers are through with odds favorable momentum, but my large triggers are not. Is this area broken? Or does it have the potential to break with that odds favorable momentum? It's a 50-50. It has potential, right, new trader? It might or it might not. I don't know, because I'm not in control of the market. But what I do know is that this area hasn't yet broken yet. I don't 100% have the advantage of a clear path. So now I start looking at my 5-1, guys. Is my entry perfect? Well, there's one divergence, which means that we're starting to see a slowdown. There's a second divergence, which means that the market has already slowed down twice. I'm beginning to lose the advantage of momentum on an area that hasn't yet broken. Let's see if we can identify a window of opportunity going from the highest point of those trigger lines to the lowest point of the trigger lines. Do you guys see how I did that? All I'm doing is identifying those strong triggers. Where are my areas inside? Well, the only one is that Fibonacci resistance. So if I summarize what I'm reading on my charts, I'm looking at a market with odds favorable momentum. I'm looking at a market that hasn't yet broken the area, but certainly has the potential with that much momentum. And I've identified one line inside of favorable large triggers where if this area is going to break, that's the most likely spot for it to continue from. It's just chart reading. All I'm doing is I'm reading my charts. It's not obligated to come back and fill me. It's not obligated to continue to the next fib. Is that how we can target the long shot exit, the slingshot exit point? NG, it didn't make it, right, KR? It's not my money. NG, what slingshot are you talking about? The pullback to the area? You're saying that with odds favorable momentum, with everything down, you're looking for an opportunity to hope that there's a small retracement back to an area inside of favorable large triggers? Right after twice, it shows us that it doesn't always make it? Is that the correct question? You're wondering how to go long right here? I just want to make sure with this much momentum. Yeah, that'll help because I think I'm struggling with what it is that you're talking about here because I've watched your trading enough to know that you don't like to fight momentum, right? Guys, sometimes it wins, sometimes it doesn't, sometimes it pulls back, sometimes it doesn't. Price just reached support and absolutely no trigger lines broke through, guys. Do we have a clear path in front of us now? Now it's pretty clearly defined, isn't it? It's not even potential. It's prices reached. This is what it looks like live. No trigger lines have broken through that area. 3 divergences in the same location. We're starting to get some information that we're losing the advantage of a clear path. That momentum on the 13.2 is beginning to slow. Do you see it? So let's find one of our instances where we had a circle. And let's see what it looked like on a 5-1 chart. Did it look like a pullback to an area of support inside of favorable large triggers? Most certainly did. Guys, are you ready to practice an entry with me? Let's take the noise off of the 13.2. Let's only look at that odds favorable momentum. What do you think? It's easy to recognize odds favorable, isn't it? Wow, this looks just like the manual. It's easy to recognize odds favorable. Guys, it's going to take you a day to say, oh my gosh, these trigger lines are strong. The odds are favorable for the market to continue. Has the market reached Fibonacci resistance? Has it reached one-to-ones? Has it reached a divergence high? Guys, we have the advantage of momentum. We have the advantage of a clear path, yes? So now and only now I can go to my 5-1 chart and I can take a look. And let's see if we're going to have an entry. Everything says up. There's nothing in the way. Everything says up. Guys, am I worried about this one red line on a 5-1? Or am I looking for those termination conditions over here on the 13.2? I'm hoping that this little red line gives me a bounce, right? Sounds good, NG. I'm hoping this little red line gives me a push. So my 5-1 is railing to the top side, right? Look at it go. Oh my gosh. The market's going up and I'm not getting paid. Guys, right now your heart's starting to race. You feel like you're missing out on money that's not even yours. What do we need to see on this 5-1 to develop our window of opportunity? Help me out, guys. Everything's going up. What am I waiting for? I'm waiting for a pullback. Absolutely, D. Zeba, how do I identify a pullback? What am I going to see that says it's time to build that window? Christina, do you remember? With all of these green bars, I want a red bar. I want something that says that that small crowd is trying to give a push. And when it does, the first thing I'm going to do is I'm going to draw a box mentally with the drawing tool, whatever you want, around my large triggers. Do you see how it's enveloped the large triggers? This is the broad stroke for entry. I'm identifying the large triggers, but now I'm going to refine that area from the highest point of support to the lowest point of support inside of favorable large triggers. And guys, this is your window of opportunity. Give me a Y in the room if you see what I'm talking about. It's not from the bottom of the triggers to the top of the triggers. It's from that highest point of support to the lowest point of support. My job is to put an entry at the top of that window and understand that if I enter at the very top of this window, my stop's got to go somewhere down here. And guys, that's a pretty big risk. Below that window of opportunity, if I get in at 89 1/4, 86 1/4 is 12 ticks. I'm probably going to have to bump that to about 16. It's a little bigger risk, isn't it? I have to be okay with that. Let's see what happens. All right, I'm in the market at 89.25. Oh, and it went just about to the bottom of that window, didn't it? But it stayed within the window. It stayed within the triggers. When that reversal bar happens, I can reduce my risk a little bit. So I go from about 16 ticks initially. That's a pretty big stop by future standards. But once I get the reversal bar in the direction of the trade, I can reduce my risk below because now it's moving in the direction. And let's see if this one slows down. Well, got a second push right back to the mid band and it's on its way up. Never caught my stop. Whoops. Never caught my stop. And then it did exactly what the trigger line suggested that it was going to do. Went up. Guys, this is your first 30 days. Identifying where the market is likely to continue, where the market is likely to go, identifying where the market is likely to stop, and then working from those advantages to enter the market where it's likely to continue. And that's all we're going to do every day, guys. And you know what, D? You and most other people would, because you haven't developed the trust yet, because you haven't developed this confidence in the momentum. You haven't developed the confidence in the lack of termination conditions. You haven't yet built that confidence in getting in at the market where it's likely to continue. And that's okay, and that's totally normal. Guys, it takes a while to develop confidence. It happens through repetition. It happens through practice, through identification. Smalls are through, large are not, odds favorable. Guys, there's a pullback directly to the top of that window of opportunity. Do you see it? This is crude oil. And if you got in at 75, 76, it didn't even blink until 54, over $200 worth of profit. This is what we're going to do every day, guys. We're going to watch the market. Is 75.41 an area that's broken? Or is it an area with the potential to break? All we're going to do is chart read. Let's work together. Is 75.41 broken 42? Yes. Every trigger line's below it, isn't it? Guys, one thing I want you to know is that when John Novak posts in this room, John Novak has 27 years experience. Sometimes his trades aren't going to look like your trades. Sometimes his entries aren't going to be at areas. Sometimes his trades are going to go against three divergences in the same location. John Novak is going to post pictures in this room that let you guys know where you're headed and not necessarily are a reflection of where you are. Right now, if you're brand new, your job is to focus on that high probability trend trade, to give yourself the skill set to read these indicators, to understand what you're seeing, so that you can begin to take these medium probability trades. So you can begin to use chart reading to give you advantages coming through. All right, guys. So there's our high probability trend trade. We'll go back to the S&P. And I'm going to go through and I'm going to look at some of the pictures that you guys have been posting this morning. Guys, my goal for you isn't for you to be profitable traders in the first 30, 60, 90 days. My goal for you is to be able to read your indicators, to be able to come through, look at the information being given to you, and then understanding. Joel, we're going to start with you. Let's zoom this up a little bit. And notice Joel's using that same checklist. Is the market coming from a good top or bottom? Absolutely. There's a termination condition that creates a full reversal that gives me odds favorable momentum. Does everybody agree that we have odds favorable momentum? Give me a Y in the room if you see it, guys. We're all going to critique this one, and we're going to see if it fits the rules. Absolutely. How do we feel about no termination conditions? Look at that. I don't have any fibs, nothing, right? So I have a clear path and I have odds favorable momentum. Well, let's go to the 5-1 and let's see if we have an area of resistance inside of favorable large triggers. What do you think, guys? Give me a Y in the room if this trade followed the rules. Zeba says yes. New Trader says yes. I'm going to say yes. What do you think? It followed the rules 100%. So if this trade followed every rule, if I had the advantage of momentum of a clear path of an entry where it's likely to continue, and it didn't win, is it because of my inability to read charts? Or is it because anything that wins 70% of the time has to lose 30? Guys, that's a perfect trade. Verified by the checklist. 100%. I would take that trade 1,000 out of 1,000 times because of the advantages. Guys, you're going to take losers. And the sooner you accept that losers happen, the easier this becomes on your brain. But that trust comes from repetition. That trust comes from posting in the room, having discussions, talking about what you see. Let's look at this next chart. Let's do it again. 13-2, do I have odds favorable momentum? Guys, I want everybody to do it with me. Joel, I'd like you to play along if we could. Awesome. Odds favorable? Heck yeah. No terminations? Heck yeah. Pull back to an area of support inside of favorable large triggers. Egads and little fishes. Those sons of guns got me again. Guys, one of the hardest things to do is to take two rules-based losers in a row and say to yourself, man, something's not working. But here's the flip side. And I want you guys to see this. And Joel, this is an important lesson. I had to learn this lesson about 1,000 times. Did you have odds favorable momentum on this bar? No termination conditions? Did you have a pullback right to support inside of favorable large triggers? So guys, when you trust your rules, don't miss the easy ones, right? Because if you had gotten in at 75.82 just above support, well, you could already be $300, right? Does that make sense? Joel, I was the king of this one. And one of the reasons I love to teach this class is because, honest to goodness, guys, I've made every mistake you guys are ever going to make. I've learned from them. I've taken it on the chin. I have felt every feeling that you guys are feeling. And the best coaching I ever got from my brother was that you can't miss them, because this may be one of the 70 to 80%. So guys, we're just developing trust, right? Joel's on replay right now. Joel, you're doing great, man. I know some days it feels like a step back. We all have it. But go through the process. There's only two options, guys. Either your rules are met or your rules are not. And if you can stick to that, if you can use that checklist and say to yourself, I followed my rules on this trade, I gave myself every advantage that I could possibly give myself to take a trade that wins more than it loses, you're going to start looking at it as a sample, 20, 25 trades, not just one trade. Don't base the merit on one. Your favorite restaurant is going to serve you a bad meal one day, right? Safia, I don't see your checklist on that one. I'll come back to it. I'm going to scroll up and go to the top. Add your checklist, and you probably won't need me to tell you what went wrong. Or you'll be able to say to yourself with uncertainty, or no uncertainty, that everything was just fine. It just didn't win. Sometimes that's the case, isn't it? Let's go through. Gary posted a couple pictures this morning. A lot of chart reading. Strong trending market. Strong trending market pulls back to support. You say synthetic triggers are flat. Gary, since when do you gauge momentum on the synthetic triggers on the 5-1? Just curious. If you go back and look at 20 great trend trades, those synthetics are going to be flat on almost every one of them. Because it's a higher time frame, because it's synthetic, the look's going to be a little different. I know, but make sure that your notations aren't talking you out of something. They're going to be flat almost every time. Look at that one. Same thing. It's because these synthetic triggers or these small triggers, and on that little bit of a pullback, they're going to get that little bit of a pinch that's going to appear to be really flat. That's great notation, though. Guys, when you go through and you notate a chart and you post it in the room, we can have a conversation. Now, maybe we just eliminated one fear of Gary's, right? We eliminated one thing that Gary doesn't have to worry about so much anymore to make it just a little bit easier on him. All right, who gets to be next? And if you're brand new to this class, guys, this is what we do every day. We talk about rules. We talk about advantages. Gary, you said there was no trade because your checklist wasn't met. Perfect, right? Either the rules are met or they're not. Guys, Gary puts his checklist on every chart to keep himself honest. All right, let's see what you have. Counter trend trading, NG. Where's your 13-2? All right, NG, you're 5-1, and I see where the challenge is here. NG, your 5-1 is an entry chart, right? I like that you're trading with the direction and everything. But you're below. Hey, D. Gary created his own a little bit, but let me give you, I'll give you guys a couple more. I'm just going to keep putting these in the room all day. In Ziba, there was an odds favorable momentum, but remember that his plan may not be yours. Hey, D, there is a checklist, not only, like that's our, absolutely, that's our most basic checklist. I put in a second one for you guys too that talks about the rules and has pictures straight out of the manual of what the rules mean too. So take both of those checklists. All right, NG, are you with me? All you're trading here is you're hoping that this mid-band holds, right? But your 13-2 isn't giving you any indication that it should, right? You've got no momentum on the 13-2. You've lost it all. Your small triggers are below. The large triggers are above. That's very true. But what if your 13.2 is going all the way back to support? What if it's going all the way back to the mid-band? Your 5.1's kind of supporting that with divergence, right? Areas below the areas. What you're hoping is for the snapback on a tiny little chart to get you where you want to be. I took this picture earlier today. You have to let the 13.2 lead the way, NG. What you're trying to do is scalp tiny little bits. And it may work for you. And the idea behind it is probably solid. But this is one blue line that you're hoping holds with the small triggers with the momentum down. All right, guys, can you hear me? Give me a while. Okay. My Discord just rebooted. I apologize for that. NG, the theory that you're using is more of a large chart theory. And I'm not going to tell you how to trade because it's chart reading on a smaller, faster level, and the 13.2 is supporting it. But what you're doing is you're using that gap theory, right? That idea that price pulls back to the large triggers. When price pulls away from those triggers fast, it typically snaps back. That's what gives us the entry on the 5.1, but it's really more for identifying termination conditions on a higher time frame, keeping you from going short into an area. And it revolves around the large triggers being above the reversal bar marker. What you've done, NG, did it go again? All right, I promise, guys, I'm not doing anything. I'm not touching anything on my end. You guys got me again on the voice? No, NG, it's not a bad trade. It's beautiful execution. It's beautiful execution of a theory that's typically reserved because you don't have anything leading the trade, if that makes sense. You don't have that overall look. It says that I should be streaming now, Gary. And if there's over 50 people in the room, you got it? Okay. There we go. Okay. Yeah, you're scalping, NG. You're doing it really well. Awesome. Thanks, Claire. But I think that you have to remember that letting that higher time frame lead the way. This is a market that's been trending up an awful lot. Everything's going up. You're trying to take a small little chunk. What this really is, NG, it's just a trend trade on the 5.1, right? And what's been an uptrend, it's a medium probability trend trade. You've recognized that you're losing momentum. These trigger lines, really, for a market that's been trending up as strong as this has been going, your exit is just your first trouble spot. In a market that's in such a strong trend, it's actually just kind of the last attempt at a trend trade before the market gets to that final Fibonacci area. And I don't know if it ended up working. See, but it ends up pulling all the way back down, right? Never made those triggers. Yeah. Because nothing says we're losing momentum, right? It's down, it's down, it's down. It's not the best because we're not looking at something. And eventually it does go up, right? It hits this support, and then our triggers roll, and then we get that continuation style right at the 1-to-1 with the small triggers up. I bet you Claire got in right there and took it all the way up to resistance. So right here, we don't have the momentum to support. We don't know if it's going to this fib, or if it's going to this fib, or if it's going to this mid band. And there's really no indication that this is where it's going to continue at 0941. We're just kind of hoping that that area holds because these trigger lines are above, right? NG, keep simulating it. Look at it. Build a win percentage. I see what you did. I understand why you did what you did. It becomes a very low probability trade, though. Keep studying it, though. But remember that it's the large chart snapback that typically gets us. All right. Who's next? D. Got a picture from D. Let's see what you have, D. 13.2 had odds favorable. That was a 50-50. And here we have smalls below the large are wide, they're angled down. We're right at that termination condition. You take the pullback at the area inside of favorable large triggers and take it down to that next area of support. No, I think that's, if you're going to take this trade, that's the way to do it. You are trading into termination conditions a little bit, D. That support. And this is where we look for that snapback to the large triggers when it's way above like that. So if you see the support and the trigger lines aren't through, you have to know that it may stop the market. It's not guaranteed to. Because you got in at resistance, your risk was already established with the reversal bar. I think the execution's really nice. And as long as you recognize that from a termination condition standpoint, you've reached one, and this goes into that medium probability, D. You recognize this one problem, but you've got a full reversal from resistance with odds favorable, a tiny little window of opportunity. This is where, as you grow with the software, as you begin to read your charts, you can use clever phrases like, hey, I've got 7 things for this trade. This is my one issue. I'll take it and I'll manage assertively. And I think that's exactly what you did. I think it's a nice trade. I think the execution is what makes it as nice as it is. New trader. Smalls below the large are beginning to turn, but you're directly into support. Your entry needed to be inside of favorable large triggers. New trader, this one I think is just a little bit early, my friend. The large triggers are still up. Your synthetics are still up. But your large triggers are down. Your mid band's inside of them, but the large are still up. You have a disagreement in the triggers right here at support with no triggers through it. Do you see it, new trader? This is more of a momentum style trade, not a high probability trend trade. You're gauging the termination. Guys, this is one of the advantages. Isn't that cool, Joel? It takes a while to realize that. We put a lot of pressure on ourselves as traders. We put a lot of pressure on ourselves to be perfect. I don't know why. I don't know why we do. My wife has worked with some of the greatest surgeons in the world, and you know what? They lose patience every now and then. They do everything right, and sometimes it's just not theirs to save. As a surgical nurse, that was one of her hardest lessons. That all you can do is what you do. All you can do is give yourself the advantages and hope for the best, and trading's no different. New trader, momentum style based on a termination condition. using the momentum of the small triggers, trading from the area. This mid-band, you've identified it great. A little different approach, not a high probability approach, but a great chart read. And remember, 90% of what we do is chart reading, right? Gary, 50-50 at the tail of momentum. Don't want to trade into a termination conditions. I don't think that's a bad idea. Market flow signal into a termination area. Large triggers down. Could break. Trade not taken because you followed your rules. Nice job, Gary. That's all you can do, right? Just follow your rules. Guys, what's the second half? If you follow your rules, if your rules say don't take this short, and it drops 100 points, does it mean that your rules are wrong? Or does it mean that the market just did what the market wanted to do? Gary, if you spend so much time analyzing what you could have done, what could have happened after you broke your rules, or not taking a trade, hey, I didn't break my rules, but look at what happened next. How would I have managed this? What you're doing is you're telling yourself, how do I break my rules and get away with it? Well, in most cases, you don't. You have to be okay. Just like you have to be okay taking a loser when the rules are met, you have to be okay not being in a trade when they're not. Guys, it's both sides. You can't have it both ways. All right, let's see where we're at. Bobby T. I love the way that flows off the tongue. All right, Bobby T. You say smalls below the large are wide, they're angled in the direction of the trend. You have absolutely no termination conditions yet. You do have two divergences, and you're entering in between small and large. I'm not sure what happened on this one, Bobby. I believe it pulled up to the synthetics, didn't it? I believe price pulled up. So let's talk about window of opportunity real quick. And this is for everybody, not just Bobby, because I feel like this is a good lesson. I'm going to show you something real quick. Remember when we're talking about that window of opportunity, you got one lucky target? From the bottom of the triggers to the top of the triggers, right? Look at how big that space is where price may retrace, Bobby. You've got a mid-band down here. You've got some one-to-ones caught in the middle. And you've really got resistance all the way up top. That's one tick off. Do you see how this whole area, in all honesty, is where the market has the potential to continue from? When those triggers are spread really wide, it takes away a little bit of the advantage because that window of opportunity can begin to grow. So I love to show this picture. The tighter these triggers are one on top of the other, the smaller that window becomes. And Bobby, did you notice how you said you got one target? And I love that. You got in, you got that first target at the trouble spot. And then that third divergence ultimately pushes you up higher. But for me, those trigger lines split is a little problematic. And notice how your large triggers still are up here above that reversal bar marker. Even more possibility for price to snap back and close that gap. And this is all that in the moment chart reading, right? Your momentum was great. Your trigger lines look good. There was nothing below you. I like it. And that split trigger line takes away the advantage just a little bit. Especially with a loss of momentum, it makes sense that it may push up a little bit higher. I think it's a great read. And I think that the fact that you took quick profits, right, get to break even, nice management. And Bobby, that's one of the most profound statements that anyone will ever say in this room. I see that now that it's over. Why? Because there's no adrenaline. Because there's no hope, there's no fear, there's nothing. There's just retrospect. So one of the best tools that you can do for yourself, and this is everybody, and Bobby, you're doing it perfectly, is take that picture and now re-annotate it. You know what went right. You had a checklist, right? What was the challenge that you didn't see in the moment that you can commit to memory to maybe help you on that next moment? And guys, if you don't find something, well, then you probably just followed your rules really well. Bobby T, great job on that one. All right, I'm going to see where we're at. Guys, I'm going to take a few minutes and refill my water. This is what we're looking at on the S&P, right? Loss of momentum. It's no longer odds favorable. We are coming from a termination condition that creates a full reversal. I don't have an area inside of favorable large triggers. We know for a fact that this isn't a high probability trade. We know that we've lost momentum. The smalls are already inside. Do you see how the advantage of momentum is gone? This is where a lot of you are making decisions. Guys, I'm going to take just a minute. I'll be back in a second, and then we will get into that second hour. Safia, your chart's up next. If you have a question, post it in the room. If you have a comment, post it in the room. If you take a trade, post it in the room. If you want to take a picture of your charts and tell me what you see, post it in the room. We'll talk about it. I'll be back in just a minute, guys. All right, y'all, let's get into that second hour. Safia, you said please critique and tell me what I'm doing wrong. Are you with me, Safia? Awesome. So did you have odds favorable momentum? And guys, this is a great thing for you to do. Is this the before and after? Okay. So let's do it this way. I want you to look at the time of entry. Did you have a clear path? Did you have small triggers through the area, Safia? Or were you hoping that small triggers would break through the area? I know the answer because I've taken this trade a million times. This was my biggest challenge when I was a new trader. You thought it was broken. What made you think that it was broken? And I'm going to show you. And I'm not trying to beat you up here, right? So what we're going to do is one of the things that happens when you guys take pictures is I begin to see these patterns that form in you. I begin to see things that you do instinctively, the way you see things. And what we do is we recognize patterns. And let me tell you, so you're going to present, and we're going to recognize patterns, and we're going to talk about it. And then after we talk about it, you're going to fix it, right? Safia, in the moment at the time of entry, how many trigger lines have gotten through that area? And the reason I ask is because you said that you thought it was broken, and I believe that a more accurate phrase is probably I hoped that it would break, right? With that odds favorable momentum. And that's okay. You're right where you need to be, Safia. So let's go back and let's answer the question of what happened. What's one of the potential challenges that kept this from being a winner? Well, you didn't have a clear path, right? And then, Safia, let's take it one step further. Let's say, hypothetically, that we had broken there. Let me change the color on these. There's one divergence, two divergence. There's a third higher divergence as well as small triggers inside of the large. So Safia, how do you suppose you could have used that smaller chart to help you identify that it was time to get out of the trade? Three divergences in the same location, right? It's a 100% termination conditions lesson, and this is great. Oh, absolutely. But if we go back to the rules, Safia, this is probably the greatest gift you could give the class today is this picture. And we go to termination conditions. Remember this picture, three divergences. No, of course you are. You're brand new. Don't ever forget that. Safia, you're going to be new for the next year, next 2 years, next 10 years. Don't ever grow out of being new. Don't ever stop learning. Three divergences in the same location may terminate the trend. It becomes even more powerful when those small triggers work their way inside of the large triggers. Do you see it? And this goes back to Bobby T's statement. He saw it after the fact when he came back and he looked at it and we talked it out. He goes, oh, now I see it. So Safia, just like Bobby T, you're in that great point. In the moment, you didn't recognize this. You had adrenaline, right? You were hoping for a win. You were excited, as you should be. But can't you go back now and re-annotate this chart? The trigger lines didn't quite break through. I had three divergences in the same location. This let me know that I needed to manage out of this trade. Guys, this is why the class is so invaluable. Because you're going to be able to come back. Oh, I wouldn't take the trade into a termination condition. That's how I'd manage that one. I'd follow my rules. But if I did accidentally take that trade into a termination condition because I had a lapse in judgment, this third divergence coming directly from a termination condition, I would be out the second that divergence printed. 3 divergences in the same location has the potential to end it. And then I think we talked about this as well. See how it pulls up to those large synthetic triggers? Yeah, you just broke rules. So how do you manage a trade that you broke the rules? You hit close the second you realize it. And if you don't, well, then you just come back and take the lesson. Great job. Absolutely. Great pictures. It's easy to annotate a chart. It's more effective to come back and re-annotate after our conversation. Paul, using patterns. Everything is below the areas. This is an area, right? Paul, I love this. And then Paul, being Paul, when there's a pivot stop out, 2 divergences, but the small triggers are still outside. The 13.2 says this area is likely to hold. Paul knows that this pushback will typically take out this previous pivot. Guys, this is a chart reading pattern, which helps Paul make a decision about his entry. And because there's already 2 termination conditions, it gives him an opportunity to manage aggressively and get to break even just in case that loss of momentum doesn't take him to the next spot. The one issue is he doesn't have momentum, right? His one issue, it doesn't have momentum, but he has the advantage of direction, the advantage of an area likely to stop the market, the advantage. That's full blown on my end, Sam. What you can do from make sure, whoops, down here, make sure that you're clicking full screen in the bottom right hand corner. That may help. So guys, this is taking a trade and using that small chart, reading the indicators. Paul, it's a great read, it's a great entry, and it's just pattern recognition. Everything that we do revolves around patterns, right? The market's not doing anything brand new today. It's doing what it's always done. We're just recognizing the pattern so we can take advantage of it. Anything can happen, triggers. Paul's identified his issue, right? Awesome, Sam. He says, I don't have momentum, but I have no divergence. I have no triggers outside. I'm willing to take a shot at this trade. If it goes, great. If it doesn't, I'm not going to risk a lot of money. What did that one end up doing, Paul? I've got a lot of stuff open. He shot up a little bit, right? And then that lower divergence, smalls below, it pushes lower. Medium probability trades have to be taken and managed assertively. Nice job, Paul. Dave B. Let's see what we have. 13.2 chart. Smalls break the area, large have not. You got to pull back. You took the one-to-ones, but moved your stop above the large triggers. I love it. Move the stop where the market shouldn't go. Nice job, Dave B. Profits, great job. Profits, great job. 13.2 says it still may go. And then you took one more. You were above the reversal bar. And I like, Dave B, the only thing I think I can say about this one is that your stop is 2 ticks below an area that may hold the market based on that trigger line look. Exiting on that second divergence with the weakness might have kept a little more money in the bank, but that was your runner. Great job, Dave B. New trader. Smalls below the large, the areas are cleared, no termination conditions, pull back to resistance inside of favorable large triggers. Well, new trader, that's just crazy, isn't it? Momentum, clear path, entry in an area inside of favorable large triggers. Who does that in this day and age? Nicely done. Very nicely done, new trader. Great read. Pinpointed your entry. Fantastic. Gary, anything can happen. Anything can happen. You get in above the area, not inside of favorable large triggers. Bailed with a small profit. Didn't have a good entry. You had a good top or bottom. Say you didn't have a termination condition. You said you had odds favorable momentum, but I disagree. You said you had an area inside of favorable large triggers, but once again, I disagree, right? Not necessarily, Dave. I weigh the options. I look and see what's going on. If I have two divergences print and the small triggers are still outside of the large, and here's a great example from Paul's, Dave. If everything says down, and this is exactly what happens. Paul took an entry right there where price exceeded that pivot. Everything says down. It's not great momentum. No termination conditions below you. And this area of resistance is likely to stop the market just based on trigger line location. These two divergences told Paul that price is more than likely going to stop out that previous pivot. If I were on my runner and I had a loss of momentum, I would probably exit at the third bar when divergence was true. I wouldn't exit right at the expectation. So I might get out and then look for potential re-entry based on this look because of the losses of momentum. And that's a weird one, Dave. I would either hold for the next area and have my stop up where the market shouldn't go, and it might have gotten me. You see how it came up above? It might have gotten me out right there. That's a tough one. Because I think that your stop was in the correct spot for the runner. And then this second divergence says that it may push up. Does that make sense? Initial stop placement was perfect. And then that's where you were forced to make that decision right there in the moment, whether or not this second divergence was going to push it up directly to your stop. And if that's the most likely scenario, take the money. D, it's a great question. Are we talking about in regards to a high probability trend trade, D? Yeah? So my reservations would come from the lack of momentum. My reservations would come from no areas inside of favorable large triggers. By the time that changes color, the market's inability to check yes on my first two requirements for a high probability trend trade, I don't care what color that is. At that point, I've already made the decision not to take the trade as a brand new user. Does that make sense? But then as somebody from a medium probability standpoint, And D, I'm never going to give you the, well, the rules aren't met, no trade, because everybody's going to grow, right? So let's do this. Let's play advantages versus disadvantage. What direction is the trend? Down. So trading with direction is considered an advantage. What direction are the small and large triggers? They're down. They're down. As price pulls back to this area of resistance, all of my trigger lines are down and below it, right? So I've got the advantage of an area where the market is likely to stop. Chart reading teaches me that. My large triggers are down and through the area. My small triggers are outside of the large triggers. And I can line it up with an area where the market is likely to stop based on a 13.2. What's working against this trade, D? Well, my background is green, which means that my small triggers have gotten above the large triggers. That's probably the biggest challenge, but my small triggers are below the area. My large triggers are below. Do you see how as you grow with the software and you do that in the moment chart reading, you can really start to determine, do I have so many advantages present that I'm willing to take a shot? And again, chart reading says that these two divergences with the small triggers outside, taking out this pivot's the most likely, and it smashes right into resistance likely to hold. So for a high probability trend trade, you had already given away the advantages that make you feel comfortable, right? And you did that through chart reading. As you grow with the software, your same ability to read charts recognize so many things for a trade and only one thing against, that you're willing to take a shot and manage assertively. If a third divergence prints, well then now I know it's a termination condition. Now I know that it may push higher with that loss of momentum. Does that make sense, D? Where you're at today won't be where you are tomorrow, and it certainly won't be where you are 6 months from now. So it's pretty cool how this works. Always have fun with this. And then new trader, let's see what you did. Did we already look at this one? New trader, you posted this one earlier, right? Termination condition. Area for entry is not inside of favorable large triggers. Is it a medium probability trend trade? New trader, I'm going to hold fast that trend trades come from areas inside of favorable large triggers. You don't have the advantage of a clear path. What this is a momentum style trade, new trader. And if you want to go to Discord and you want to start compiling how to potentially take that trade and start studying a little bit, new trader, to give yourself more advantages, let's go to the trading rules. And I want you to come here and take a look at this momentum style trade. And start studying the rules, new trader, and go back and see how often this happens, because it can be a wonderful trade, but it's not a trend trade. All right, Christina, your first trade. Congratulations. Let's see what we have. And I love this. My thought process. Thought process. You have odds favorable momentum. So we're looking somewhere down here on the 13.2. Smalls above the large are wide. They're angled in the direction of the trend. That's really big. This is your 13.2. I'm trying to line it up real quick. 75.69. Your entry was at 75.33. So when I look at 75.33 on your large chart, I can't see it. But it looks like you had odds favorable momentum, Christina, right? 13.2 had odds favorable momentum. The small had gone through, the large had not. All right. Your entry, and I like this. This is a great one. Your entry is above all those areas, right? Christina, do you see how price Pulled right back to that mid band, right at those large triggers. That's okay. You're fine. You're doing great. We'll get there. But do you see how price gave you a reversal bar and pulled all the way back to that area of support inside of favorable large triggers? So this is your entry. That's your rules-based entry. You had momentum, you had direction, and that was right around 75.18. That's 15 ticks better. 15 ticks less risk, 15 ticks more profit. And then when you take that trade, let's go back, you're taking exits. Your first target point is 75.85, right? That Fibonacci resistance. And with all that momentum, maybe you were just taking predetermined profits. It looks like it. You took 200 on the first, 300 on the second. It's still a great trade. And Christina, you had the advantage of momentum. You appeared to have the advantage of no termination conditions. Yeah. And with that clear path, it could have been a little better entry. But you're trading with the advantages, right? In your first week, you're starting to identify the advantage of momentum, and you're able to take advantage of it. You're identifying not being directly into an area likely to stop the market, and you're finding a way to take advantage of it. Ron likes this trade because Ron's entry was right here above the fibs, which is just a little bit after you get in, and his exit's right here at that red resistance. Great job. What a great trade. Luciano. Absolutely. So, Luciano, gap theory, right? When price accelerates away, reaches support, the large triggers don't follow, they remain above that area. Absolutely. It's very likely to snap back and close that gap, right? You know we've got pictures of that. Same idea using a mid-band, Luciano. Same idea using resistance. Over and over we see this pattern. Price reaches, large triggers don't follow. It's very likely to close that gap. Price accelerates away, large triggers. It's not necessarily a short, but look how that mid band gets run over as price closes the gap. Is that recent? What happened afterwards? Was that crude oil? Went down. Here it is on crude oil. Just happened. Price reached support. See how it closes the gap to the large triggers? And that one ultimately went down, Luciano. It happens sometimes. That's the market trying to get you to break your rules, right? Let's look. It's been a hard trending day, but reaches support, closes the gap back to the triggers even though they're not a full bar away. Reaches support, closes the gap to the large triggers once again. Reaches the mid band, closes the gap to the large triggers. Do you see how it, maybe not calling a trade, reaches support, mid band, closes the gap to the large triggers, but keeping you out of that first shot because it's just a pattern. Reaches the mid band, closes the gap to the large triggers. So we're what, like 6 for 7 on that, Luciano? Is that enough information to know that this is a pattern that repeats itself? To say to yourself, all right, I'm just going to be a little bit patient and see what happens. Everything we do, guys, everything we do revolves around patterns and getting advantages. Gary, mid-band outside of large triggers, loss of momentum. How about just termination condition? I won't, new trader. Because it's not guaranteed, is it? Look at Luciano's picture. Isn't that the gap theory just beautifully? Isn't that everything that we just saw happen 7 or 8 times, new trader? It is, right? The market smashed through. So if I go long right here, that's just hope. That's hoping that something happens. That's fighting triggers. That's fighting direction. And then, Gary, you said you noted on their termination conditions? All right. Just so you know where my brain goes, Gary, is I always go to your annotations. So I like that you had that on there. Great job. Sorry. I always go straight to the annotations because my brain isn't as advanced as the average mammals, I suppose. When I have termination conditions, I don't care where the midband is, right? When I have termination conditions, that's it. I can stop right then. Everything that I think about after my rules are broken, Gary, what if there was a midband inside of favorable large triggers? And this is the way my brain works. It may not be the way your brain works, Gary, because you're using your checklist great, right? But once I have that termination condition, I don't have momentum. I don't have a clear path. I couldn't give a rat's patootie. That's the only chart I need to know whether or not I have enough advantages to take a trade. Chart reading is great. I love chart reading, but make sure that if you're going to take the effort to annotate a chart, make sure it's relevant. Rule number 3 doesn't matter if rule 1 and 2 aren't met, especially for you new users. But Gary, if you had said, I have a clear path, I have odds favorable momentum, the only thing against it is this midband that's not inside of favorable large triggers, so I took a shot and I'll manage assertively. I like that. Good stuff. All right, guys, how are we doing today? Anything can happen, right? 2 divergences, small triggers inside. No more short trades. Do I have odds favorable momentum to the upside? No. Did price reach resistance and absolutely no trigger lines go through? Don't have a clear path. So guys, if I don't have momentum and I don't have a clear path, what am I doing right now? What's my best option as a new trader? Is wait. Absolutely, new trader. Absolutely, Ziba. Guys, the hardest thing that you will ever do is nothing when you don't have an advantage. Because it's boring. Nothing doesn't pay, but nothing doesn't cost. Small's below the large are wide. They may break the area, right? And Ziba, that's awesome. Paul, you're taking a momentum style entry, right? It is. It is, it is. That's a 50-50, losing momentum, but it still has it, right? You get in at the bottom. Quick profits, second divergence. Small triggers outside. So Paul, why did you manage out? 2 divergences? Which is okay. I love it. And Paul, you were probably going 2 divergences. I'll let it come take out this pivot at the midband. Yep, right there. I didn't even look at your annotation. I knew what you were thinking. It's perfect. You made money, right? It does. It moves quick sometimes. And Gary, you're waiting for your rules to be met, right? Chris T, you're waiting for your rules to be met. See how that works? So there's two options here, guys. Either resistance holds with the large trigger still down, the small below everything, right? If it does, well, then we'll look for opportunities short when it happens. Or if this is just overrun with that loss of momentum, if this is just overrun with three divergences in the same location, can't we just let the areas break, get a little odds favorable momentum, and look for opportunities to the top? So when there's nothing to do, it's okay to play if then. It's okay to play if this happens. Well, then my rules will be met and I'll take a trade long. But if that doesn't happen, right? Then I'll wait for everything to roll again and I'll trade with that overall trend. And Gary, exactly. It's not a real termination condition, so you're not looking for that HVA. Every trading plan is different, guys, but focusing on simplicity in the beginning is going to keep you focused, nothing more than recognizing advantages. And when advantages present themselves second nature, your trade, you're going to have more trades. But guys, it starts with, I'm going to show you this. This is an example of how to write yourself a very simple trading plan in the beginning. And I'm going to let you guys look at this one. And Claire, you're waiting because the triggers are below, right? If all the triggers are below, doesn't it make sense that this is an area likely to stop the market? At least in the moment. Why hope? Most expensive accessory I own is hope. Well, right behind opinion. Guys, I just put this in the room. If you're brand new, I want you to embrace this. Keep it simple. This is an example of how to write a trading plan for a brand new person. My trade is the high probability trend trade. In order to enter this trade, I must have the conditions of the checklist met, right? Because this checklist gives me a trade that typically wins between 70 and 80% of the time, doesn't it? Doesn't it make sense as I'm learning to read indicators, as I'm learning to read my charts, that I give myself the best chance of success? I hope that seems relatively obvious. If the rules aren't met, I don't take a trade. If the rules are met, I do take a trade. Whether they were met or not, my job is to post it in the room and to get feedback. So I'm going to write a plan that identifies entry points. And I'm going to take pictures, guys. 15 pictures a day. 15 pictures a day is 300 pictures a month. That's 900 pictures over the course of 90 days. Steal them, grab them, take them. Guys, focus on your entry for the first 30 days. Because it's going to teach you to recognize advantages. Does that make sense? Let your management plan be mechanical. Keep it simple, guys. Management takes chart reading, doesn't it? If your first 30 days is dedicated to learning how to read charts, does it make sense that you won't be completely proficient at management yet? Is it okay to not be completely proficient at management in your first 30 days, 60 days, 90 days? I hope so. I do hope so. Guys, I want you to embrace that a little bit. Embrace the simplicity. And now I'm going to give you something that my brother and I worked on yesterday. I told him I wasn't going to go through it, but I'm going to go through it because there's nothing to do in the S&P, right? There's no live market trade to talk about. We've already talked about the chart reading. So guys, I want you to see this example. Whoops, it's downloading. Here we go. And this is just a general for all of you. Do you want to know the path to becoming a successful trader? This sheet has done nothing more than take this picture and I've attached links for what everything means. Guys, to minimize your learning curve, post pictures of your trades in class. Every trade, win, lose, or draw. And if you win and the rules are wrong, you have a short-term victory but long-term failure. How will you know the difference? To be sure, you need feedback from us. And when we say us, we mean Nexgen. John Novak will give you his 2 cents. I'll give you at least 8 cents worth. We're here to help, guys. We're not here to beat you down and tell you that you're wrong. We're here to tell you how you can do it better. And if you place a trade on simulator and you participate in class, there's no risk of loss or capital, right? You need someone to tell you what you did right or wrong when you're new, and this is part of the educational magic Nexgen offers new traders. If you've been on demo more than 2 days, you recognize that this is exactly the path that we try to get you on. You can use this outline for education, guys. There's that picture, your path to becoming a successful trader. Populate your spreadsheet. Use the checklist. I've posted that checklist in class 3 times today. Post your trades in class with your entries. Every day, Gary. John and I talk for hours on Skype every day, and if we can come up with something to make the learning process easier, we argue about it for about a week or 2 before we present it. Post trades in class with your entries and exits, along with the rules annotated. Copy paste it on the chart, right? Guys, we do this every day. Post your rules. If you have Snagit, put that checklist on there, but make sure that you're truthful on the checklist. Luciano, thanks for this picture. I steal pictures. Insert trades that follow the rules into your spreadsheet, guys. Build that spreadsheet. How do you annotate a chart if you don't have Snagit? There it is right there. We shared this one in the room, didn't we? Write your rules on your chart. You'll know whether or not you broke them. And if you're not sure, then we'll talk about it. What's next? Guys, if you trade 2 contracts, define your management plan. A mechanical approach eliminates emotion or opinion. Oh, we skipped this one, right? Insert the trades that follow your rules into your spreadsheet. You got to study them. Let them be second nature. Here's that picture again. We talk about this, right? Guys, create a mental database of what's bringing you success. Define your management plan. Here's that management plan. Very mechanical. Pictures of every move. Allow yourself a minimum of 30 to 90 days to practice the mechanical approach to a checklist-based entry and that $100, $200 automated exit. And then you can adjust your targets based on your experience later. And guys, here's the most important thing, I think. And I love this, and we talked about this a lot this weekend, how to put it into words that make the most sense, and I hope this does. Accept that you may be a less capable of a trader than you may initially believe your first time out. Guys, believe that you are going to make mistakes. Everybody feels entitled to win, but only those who trade well do. Everyone thinks every trade should be a winner. Before risking your money, test your trading plan using a prop firm such as Apex Trader Funding. They run sales all the time, and for less than $200, you can trade up to $50,000 worth of capital. The best part is you get to keep the first $25,000 and 90% after that. If you make a $3,000 profit before a $2,500 loss, Apex will give you the $50,000 account to trade live. You can add up to 19 more funded accounts if you wish. So that's like trading $900,000 of your own money. Oh, be careful. With only hundreds of dollars of exposure. And guys starting out use their money. You'll thank us later when you realize what you did not know yet about yourself. Trading live money. Finally, when you can take money in a real-world setting with someone else's money, trade your own money and their funded accounts, right? It's pretty simple, D. You ready? If you are trading a $100,000 account or the $50,000 account, here's the rules. Make $3,000 before you lose $2,500 and you're funded. Pretty simple, right? You have a minimum of 7 days to do it. And guys, if you follow the link from this, it's going to take you straight to the Apex account. And there's a section on frequently asked questions, right? Everything you need to know about that. These are all the different accounts that you can try trading. If you think you're ready to trade live, guys, pass, right? D, there are traders with Nexgen that are all using Apex, Top Step, that are using these prop accounts. Because what happens is when you go live the first time, if you've ever done it, there's a certain pucker factor, right? You will. Some people do it and blow it out. And then they just reset the account. They go, okay, I made mistakes. I posted them in class. We had the conversation. Guys, there's no reason anymore in this day and age to risk $20,000 of your own money. And they run sales all the time. I got my Apex account 80% off because they were having like a Christmas sale. Look at all this indecision, guys. Straight to the fib. Now we have, I don't believe so, Sam. Now we have a termination condition from the bottom, right? Now we're waiting for an odds fit. Now we're waiting for a reversal. But now we have a termination condition. Here we just had a pivot in the middle of everything. Three divergences said it may push up higher, but didn't it push up higher to an area likely to stop the market? Four divergences there said that don't go long. Now we have the termination. Now we've got the trend. Now we're waiting for the momentum and the clear path. Does that make sense, y'all? Termination hits support, closes the gap. Smalls are through support, but they're not through this key divergence low. Maybe there wasn't one, Gary. Do you need one there for it to be a termination condition? Small triggers haven't broken through the divergence low. If I go to the rules and I look at termination conditions, and I'm not sure in the moment, a magenta divergence high line, a cyan divergence low line, I have to use that process. How many trigger lines are through the area? Absolutely none. Am I looking for a short trade into an area that may stop the market? Rule number 2 hasn't been met, guys. That's all it is. Either rules are met or rules are not. Joel, how you doing today? You've typed okay about 10 times. Historically, when people type okay in the room, it means that they're upset about something or don't understand something. And that is their preconditioned response to keep me from calling on them, which is my cue to go, hey, is everything all right? Guys, we're just in a waiting game right now. Same thing here, right? But Gary, you didn't need a market flow reversal bar to identify that as a termination condition, did you? You didn't need a third chart. You can identify that the small triggers haven't broken through resistance yet, right? It's okay. 90% is recognizing advantages. 90% is waiting for that clear path. Guys, you've been waiting so long. How many of you are going to break your rules? Exactly, Joel. So there's no trade, right? How many of you are going to let boredom dictate whether or not you follow your rules? How many of you are going to let the fact that you missed one dictate whether or not you follow your rules? Guys, you stay safe in those tornadoes. Don't you have basements in Chicago? Get your basement, silly. Stop trading. Where are the large triggers? Oh my gosh, that's 1, 2, 3 areas that haven't broken, right? Uh-oh. Well, then go down to the condo's basement, Gary. The market will trade tomorrow. Guys, look at the trigger lines. Look at that gap between the trigger lines. And I don't have one area inside of either of them, right? When that little devil starts sitting on your shoulder, hey, take a trade. Hey, go long. There was a termination condition at the bottom. Hey, look at that momentum. Wait, yeah. See, that's a good plan. The hardest thing you will ever do it as a trader, especially as a new trader, is wait for your rules to be met. No matter what happens next. Prices directly into 75.51. At 75.51, no trigger lines have broken through. I've identified a termination condition. Guys, there's some days where it's really difficult to teach this class because the live market is forcing patience, right? We got to talk about other stuff. I'm going to take a few minutes. I'm going to leave you guys with the S&P. Let's see if it decides to break from that termination condition or if it decides to hold. We're not in control of it. If your rules are met, take a trade. Post it in the room. If you did market replay over the weekend and you want to share a picture, feel free. If you have a question, if there's a concept that you would like to discuss, post it in the room. I'll be back in just a minute, and we'll finish out this day strong, guys. Back in a few. All right, guys, let's work through this last hour. What do you say? D, let's see what you did. All right, D, we have odds favorable momentum on the 13-2. You say yes. No terminations. You said no. You said that you have a termination condition. So D, on your 13-2, price has not reached an area of resistance, right? So technically, you haven't reached a termination condition. I like it. Area for entry inside of favorable large triggers. D, that's the one where you had a challenge. Did you get to the fib? Here, let me do this. That's kind of tough to see. It's a little small. Let me work through this one real quick. I like it because this is a good lesson. All right, I'm going to pull up your picture and I'm going to take a picture of your picture and we're going to look at the picture. All right, D, this is your 13-2. And we're going to do 2 lessons off of this one. Price hasn't reached this support, right? Do you see it? And that's our only requirement for determining whether or not an area is a termination condition. Price reaches the area, trigger lines remain above. This is the bar where price finally reaches support. Does that make sense? Kinda? No worries. So let's go back to, I like that you said kinda. A lot of people will just say yes when it's not a yes. 2-part process, right? Price has to reach the area, D. And watch, let's use the live market as an example. I'm going to use this right here. So we're going to pull up the 13-2. 2-part process, D. Price reaches an area, has to be the first part. Price reaches the area. Where are the trigger lines? They all remain above. This is an area with the potential to stop the market. It may stop the market. Does that make sense? Whoops. That's what happens when you hit the wrong button. Termination condition. Price comes down. Smalls break the area, larger above. It has the potential to break, but it hasn't yet broken. And it's not until both the smalls and large get through this area of support that the area is broken. But then you go into 50-50s here. So every termination is good until the next termination condition. And when we're talking about entries in D, this is why even though you were close, and if we go to your picture, you were close to the area, but you hadn't reached it. And a lot of people will say, well, Mark, he was too close to that fib. He was too close to that termination condition. Remember that when we talk about our entries, let me find a good picture of it. I've got a good picture that we'll take a picture of a picture again. When we're talking about our entries, and I think that this is a good lesson for everybody. So guys, I want you to hypothetically be with me. Hypothetically, we have resistance right here, okay? I'm going to build a little resistance for us. So we're looking at it, odds favorable momentum, right? Smalls above the large are wide. Our trouble spot from the top of the bar, you're going, oh my gosh, I've got 3 ticks. I don't have room to the termination condition. How am I possibly going to take this trade? This is where you remember that our job is to wait for the pullback, right? To wait for that pullback to the area of support. So what happens is we're not gauging distance from the top of the bar. We're gauging distance from the area where the market is likely to continue. So we go from having 2 or 3 ticks to that area that hasn't been reached to, in all honesty, having closer to 20, 25 ticks to get there. Does that make sense? And that's one of the reasons, and that's for everybody, that's one of the reasons that we say price reaches the area. Not the trigger lines reach the area, price reaches the area. That's a great trade, D. It's a good read. Cornelio, you're just practicing, right? I love it. Just making sure everything says down. You're circling areas inside of large triggers with momentum. It's a little scratchy here, but I see what you're doing. Market comes down. There's your pullback, pullback to resistance. Nice job. Market comes down. There's your pullback, pullback to resistance. And it continues down based on the momentum of the higher time frame. Great job, Cornelio. Oh my goodness, it didn't break it, did it? Rule number 2, keeping you guys safe. All right, moment of honesty. Who took that long trade and lost it? Who said, you know what, because there was a termination condition, I'm going to break my rules and do a termination condition? Took that long and you're wondering why you just got run over. I hope not. Good job, Joel. But that's a common one to take, right? It's easy to convince yourself because of a termination condition, I should be looking for this trade. Guys, termination conditions work right to the next termination condition. What you're seeing here is a fight between buyers and sellers, right between resistance and support. Let them fight it out. Oh, Joel, I can't count on my hands, your hands, and both of us barefoot how many times I've done it. Waiting for a clear path, guys, is going to help every time. So what's going on now? Let's play if-then. Right now, prices reach support. No trigger lines have broken. Well, now the small have broken through support. The large have not. If I identify my large triggers and the areas that fall in between them, I can say if I get a pullback on this medium probability trade, area with the potential to break but hasn't broken, I can identify where the market is likely to continue if this market's going to continue down. But guys, has 39.97 broken yet? Or does it have the potential to break? Potential. What else do we see? What's the market been doing? It's been fighting between resistance, support, resistance, support. So now I have a giant fight, a maybe gonna break, and I've got a window of opportunity. Guys, 50-50 trades after the market consolidates a little bit, they either win big and run forever or they get run over almost instantly. We've identified lines in the sand, right? We've identified where the buyers said no more short pressure, and we identified where the market said no more long pressure. When you see a market that seems to consolidate, you have to ask yourself, do I want to be the first one, or does it make sense to let an area break, to let an area get all my trigger lines to the other side, to really establish that clear path as we break out of a range? Does that make sense? Are you guys hearing what I'm saying here? Absolutely, Joel. If the large triggers get below, the small triggers get below. Absolutely. Right now, it's nothing more than potential. Nothing more than potential. And no matter how I adjust my charts, it's hard to make those large triggers really scream. Just sitting. If you do take this trade, you know that it's a medium probability trade. And if you're taking a medium probability trade, you know where your first trouble spot is. And you can manage assertively. NG time, let's see what you did, my friend. Termination condition. Right? Anything can happen triggers, termination condition, multiple divergences. You take an entry outside of favorable large triggers. And you said that with this much momentum on the 8 range, with everything in an established downtrend, with all my triggers down, this is a trade that you're willing to take, giving away the advantage of momentum and a clear path, lower probability trade. Don't have an area inside of favorable large triggers. You're really counting on that overall trend of the day to carry you to the next level. And guys, you can do whatever you want to do. Remember that. Your trades don't have to be my trades. My trades don't have to be your trades. High probability trend trades don't have to be what you do. My goal for you guys is to recognize when there's trouble so that you can make an educated decision on how to manage it. Justin, this is the tiniest little picture ever. I'm going to see if I can get it a little bit bigger. It doesn't let me zoom it anymore, so we're going to be blurry, Justin. 50-50 trade. Smalls are through, large are not. Perfect entry, it looks like right at resistance inside of favorable large triggers, makes the trade manageable. Quick profits, relying on the momentum and the downward pressure to keep going. Small risk after the first profit. And that's it, Joel. Joel, you know the high probability trend trade. Now we're just working on believing it. You know the perfect looks. I've seen you take it 100 times. Now you're working on believing that when it doesn't work, it's okay. That's a big part of it. Great job, Justin. So you can take those call-out tools and write on it. Describe your momentum. Describe your entry. I like it. 50-50 is pretty simple. It means that your small triggers have broken the area, but your large triggers have not, which means that it has the potential to break, but it hasn't broken yet. And I think we just saw that right here, didn't we? Smalls are through, the large are not. This area has the potential to break with that momentum, but it hasn't broken yet, which means that if you take this picture perfect entry, you're going to have to manage it assertively. It gives you the opportunity to take profits at the first area, get to a zero loss level. And I have a feeling Paul's going to show us that exactly. 50-50, put your order in, and it went. You didn't get in? Oh, you just got back? But remember we talked about on 50-50s, and Justin, this is a good one. Bring it back up, Jose. Don't talk to me. Do you have your rhythmic trader up? So that you can manage your trades from rhythmic trader? Awesome. Guys, if I take the right trade, if my stops and targets are in place, and my Ninja Trader 8 crashes, I just bring it back up. Because I took the right trade. My stops are in the right place. Those maintain. But do you see how on the area with the potential to break, there is no divergence on a 5-1 entry? There is strong triggers on a 5-1 entry, and there's a tiny little window of opportunity on a 5-1 entry. Guys, this is a picture-perfect entry for a medium probability trade? Give me a Y in the room if you're with me on that. Because you're all going to take 50-50 trades, right? Of course you are. Because termination creates a full reversal, gives you odds favorable. Area with the potential to break. This is a picture, because it's a picture, right? This is a picture perfect entry for a 50-50 trade. No divergence, strong triggers, small window of opportunity. Because if I'm giving away the advantage of a clear path here and I'm relying on potential, doesn't it make sense that I don't give away any advantages on the entry? The medium probability trade is defined when a small issue exists, not multiple issues. Everything says go into an area with the potential to break. What did it end up doing? If I manage assertively, I've identified my first trouble spot, haven't I? That's the area that hasn't broken, which means that if I got in at 99, my first profit target, if I'm not taking that $100, absolutely, Walter. Let's take this picture. So Walter, what's a 50-50 trade? It means that the small triggers are through, the large triggers are not. Are you comfortable with that much of it? Cool. So this means the area straddled has the potential to break with the odds favorable momentum, but it has not broken. So it's not a clear path, it's the potential for a clear path. If I'm looking for an entry on a 50-50, for new users, 5-1 entry should be perfect. No divergence. Small window of opportunity. Strong trigger look. Is everybody comfortable with that? If you're going to give up the advantage of a clear path, give yourself every advantage for entry. And then medium probability trades are managed assertively. Know your trouble spots. Where's my trouble spot? Well, my first trouble spot has to be that area that hasn't broken yet, right? So if I'm in right here, I'm either taking profits on a portion of my contract at the first trouble spot and getting to break even. Does that make sense, guys? Your ability to read charts is going to take you into medium probability trades. Here's an example. Perfect entry, right? Established targets, recognition of the first trouble spot. When you reach the first trouble spot, notice how he's at break even. He's not necessarily taking profits, but he says, man, this is the point where things could go wrong. I'm not going to risk any money here. But because everything still says down, it makes sense to stay in the trade. And guys, it went down all the way to 93.25. So let's go through the process again. Price has broken through. Small triggers have, large triggers have not. Are we still at a 50-50 trade, ladies and gentlemen? Are we still at an area with the potential to break, but it hasn't broken yet? Do you see it? What are the differences on this entry versus this entry? Now I have a divergence, don't I? So now I have a visual slowdown. My small triggers are down and they're outside. My window of opportunity is relatively small. Still a medium probability trade, but now I'm giving away a little bit of advantages. And it may work. I'm not in control of that, but I'm going to let my chart reading. If I caught this one and I did that 100, 200 thing, I'm already out for 300 bucks. I've got $300 in the bank. I'm feeling good. And now I can just say to myself, let the area break. Right? It's all chart reading. In the beginning, for your first 30 days, guys, learn how to read your indicators. That's it. Focus on entries. Start recognizing where the market's likely to continue, where it's likely to go, where it's likely to stop. Ask a million questions, take a million pictures. Start building a database that makes you feel good about what you're doing, that brings you confidence, that makes you comfortable. Study this look so much that you understand when you have the advantages. It would for you, Gary, right? And Sam, that's up to you. Gary says he needs a market flow signal to enter 50-50 trades. That's great. That's another level of confirmation. Sam, take pictures of everyone that you see. You're on simulator, right? Awesome. So Sam, can you tell the difference between a clear path and a path that may break? You're pretty comfortable with that now, right? You're at that point? Cool. Take them all, Sam. Post them all. Let's talk about everything that you see. Guys, I'm not trying to harness you to a high probability trend trade. What I'm trying to do is get you to recognize the advantages that your chart reading is going to provide you. The more complex you get, the more chart reading needs to happen. Paul, perfect 50-50. Quick profits. One divergence print, smalls outside. Perfect entry. Quick profits. Paul, it's like you're stealing today. So Sam, do you see how he can gauge advantages? And through that gauging of advantages, he can make good decisions. I love this one, Paul. Odds favorable, everything says up, coming from a termination condition. Pull back to the area of support inside of favorable large triggers. Next. Sam, Paul, one thing. Oh, that was crude oil. Never mind. So you hadn't reached the area yet. All right, ladies and gentlemen, give me a Y in the room. Odds favorable. No termination. Smalls outside, small window of opportunity. Picture perfect entry right at the area of support inside of favorable large triggers. How much sleep should Paul lose over losing that trade? Not a wink, right? None. That's hard, isn't it? What if Paul takes this same look 3 times and it doesn't work? Thanks, Paul. You're a great student. It took a year. It's worth it though, right? You're young. You're what we call a whippersnapper. You got the rest of your life, brother. Don't be in a hurry, guys. It all clicks. Joel, I've done it. I've started my day and taken 2 or 3 losers in a row, and every one of them were rules-based. And instead of going, holy crap, what's going on? My head says, well, cool, I got my 30% out of the way. I'm going to wait for that next one to set up, and I'm going to take it, hell or high water, because I know the advantages that it gives me. And guys, there's another one, right? Everything says down, pulls right back to the midband inside a favorable large trigger. Small still outside, weighing the options. Remember when I said when it consolidates, if that 50-50 wins, it wins big? Does anyone remember that? Guys, there's your 50-50 winning big. Pretty cool, right? Safia, let's see what you did. Guys, there's no doubt in my mind that what we teach is effective and amazing. I hope that if you've been with us for any amount of time, you realize that what we teach is effective and amazing, right? Awesome. Medium probability trade, right? You've nailed it. Rule 3 met. I love it. Managed aggressive. Maybe a little too aggressive, right, Safia? Yeah, that's going to happen too. So, Safia, why didn't you take this 50-50 with no divergence? Didn't want to lose. Oh, been there. Been there, done that. Guys, when I went live the first time, I didn't know anything, honestly. And then when I started learning, I started trading to not lose rather than trading advantages. Safia, this look is the same setup on the 13.2 as this one, right? 50-50, 50-50. What's the difference though? No divergence, strong triggers, tiny window of opportunity. One divergence, smalls are closer to the large, still a small window of opportunity. Do you see the difference between the two? Safia, you could have been in this one and already paid, and then taken this one again with money in the bank. Isn't there? It's a 50-50, right? It does, Chris T. Isn't this one a 50-50 as well, Safia? So let's talk through it, because I love this. And this is where repetition provides consistency as well. Odds favorable momentum. Odds favorable momentum. 50-50. 50-50. Safia, has the large trigger broken on the second trade? It's still above, isn't it? Do you see how your perception changes compared to in the moment to going after? And this is why repetition, guys, is key. This is why doing something 1,000 times makes you better at it, and why there's no reason to create expectations of excellence in your first 30 days. Safia, smalls above, large below. Smalls below, large above. Smalls below, large above. It's a 50-50 on both, right? Odds favorable momentum. Pretty amazing, right? So you take that, and now let's look at the entry conditions on the 5-1. I love this picture. Guys, I love it when you share in class, because this is how we get better. So here's your first entry. Here's your second entry. No divergence, with divergence. Small's way outside of the large, small tucked in against the large. The conditions on the 13.2 are completely identical. The conditions on the 5-1 are not. But Safia, it's only one divergence, right? That divergence probably got you to your entry. The small triggers are outside. So let's talk about for the management standpoint, Safia. This divergence low becomes your first trouble spot, right? That area where there was already a slowdown. So you're in at 96.50. And if you get out at 94.50, $100, Well, you might get stopped out break even. But you never even gave it a chance to get a reversal bar, did you? You were so worried about not losing that you never even gave it a chance for a reversal bar. You had already managed out of a trade before the trade ever had a chance to mature. This is fear. Where does fear come from? But the divergence had already happened, right? That divergence probably printed right when you were getting in. You saw it after? Okay. And this is why rules help, guys. I have a very clear set of rules for what it'll take to get me into the market. I have a very clear set of rules for what it'll take to get me out of the market. And that all comes through repetition. But guys, if you're willing to take a trade, if you're willing to pull the trigger on the trade, you have to give it time to do what it's going to do. If you try to control the market with your stops, if you start focusing on every tick, you're just going to get ticked out. The second time I went live, and let me preface this, the first time I went live, I lost about $4,000 in 2 days. Somewhere between 4 and 5. I blocked it out. But I did it because I didn't have a plan, because I didn't know what I was looking for. I didn't have rules. I had never participated. I didn't take pictures. Guys, you want to be on? Can I be honest with you? I just expected to win for no other reason than my last name was Novak, I suppose. I hadn't done any of the work. I hadn't gotten the repetitions. I never posted pictures. I never asked questions. Guys, the CEO of the company, the gentleman that wrote the software, is my older brother, and I never once asked him for help. I just took his indicators and decided I was going to be great. I lost a lot fast, like really fast. And this is why we wrote this. I was unwilling to accept that I was a less capable trader than I wanted to believe. Right? I felt entitled to win. And I hadn't learned how to trade well. And it comes from, guys, create a very clear set of rules. If I have a 50-50 trade, there is. You have to be. Christina, if you lie to yourself, if you take crazy trades on simulator and make $1 million, the odds of you having that success live are slim to none. And like Chris T said, going live gives you a whole new level of focus. You will be ironing pleats out of the center of your office chair the first time you trade live money. Because we all do it too soon and without the proper, experience coming in. So guys, let's talk about it. If I have large triggers and small triggers coming back together, and I'm at an area with the potential to break that hasn't broken, and I have the divergence, and my small triggers are up against the large, how many advantages am I relinquishing if I decide to go short at this fib? I'm not saying whether it's a good trade or a bad trade, but I'm asking you, how many advantages have I given away? I'm giving away the advantage of momentum, right? I can see the slowdown on the 13.2. I can have it verified on the 5.1 between divergence and small triggers partially inside of the large. I'm giving away the advantage of a clear path. I'm forfeiting it. So, is it fair for me to expect, if I do get short, hoping it works, is it fair for me to put the pressure on myself to expect this to be the easiest winner that I've ever had when I've identified through chart reading two advantages given up? And guys, what you'll do is you'll start talking yourself through every trade. I have the advantage of momentum. I have the advantage of a termination condition that creates a full reversal. I have the advantage of a downtrend. I have the advantage of momentum. I have the advantage of a small window of opportunity. I have the advantage of no slowdown. Am I willing to take every one of those advantages and put them up against not having the advantage of a clear path? Every day, guys. Every day I would take this trade because I've studied it enough and I've seen it enough that I understand that this one's probably going to win more than it loses. This one's beginning to give away an advantage, isn't it? Just a little bit, only one small one. Now I'm giving away the advantage a little more clearly. Guys, this is all we're doing. Every day, every time you look at an indicator, I want you to think in terms of advantages. I want you to think in terms of disadvantages. But I don't want you to trade to lose or to not lose. Could you imagine your high school football coach going, all right, guys, let's go out there and just try not to lose. If you're running with the ball and you see someone get close to you, go ahead and lay down because I don't want you to risk a fumble. I want you to lay up on this par 3 because you might not get it to the green. Guys, I want you to look at terms of advantages. I want you to be cognizant of what you have against you so that you can manage. But if I'm in this trade, guys, you better say to yourself, there's not a damn thing getting me out of this trade because I have so many advantages. I'm not going to let these little ticks undo all this hard work the market's put in to give me these advantages. That's my thought. A little soapboxy today, guys. Sorry. All day long, Paul. I'll take that trade. Here's a 50-50 at the bottom. And check this out. No divergence. Easy, right? One divergence becomes more difficult. There's 3 in the same area. I'm not looking for it anymore. There's another 3 divergences to remind me that even though I didn't catch this one, stay the hell out. Sam, you tell me. Take a picture and write your rules on it. Who cares what I think? Tell me what you think. Take a picture of the S&P and tell me what you see. And then we'll have a discussion about it. Here's what I see on crude oil right now. I see a termination condition. I see a full reversal. I see an area with the potential to break that hasn't broken. I see trigger lines rolling and coming up strong. And right now that window of opportunity is pretty damn big for a 50-50. So I'm going to let it do what it does. And if everything keeps rolling up and I have that odds favorable and I don't hit this next key area, well, then I'm going to make an assessment based on the conditions of the 5-1 if I'm willing to take a medium probability trade. I've planned all this out, guys, already, just from that little bit, from that moment of reading. You got that picture, Sam? All right. Well then, Sam, what you're asking me to do is manage your trade while you're in it. You don't want to do that. Focus on your trade. How do we feel about it, guys? Termination, odds favorable. Nope. What creates a vacuum, Alex? Large triggers below the reversal bar. If price snaps back to these large triggers, it's at the bottom of this potential window, isn't it? If you got a reversal bar now, oh, and this bottom area is kind of coming out. Look at how that window corresponds with the top of those trigger lines. I don't look for gaps. So the vacuum, Alex, has nothing to do with the 5-1. It's a 13-2 termination condition. Does that make sense? What are the synthetics on the 5-1? They're the large triggers on the 13-2. So I can use it from the standpoint of maybe if the synthetics are way down here, that vacuum makes sense. But guys, look at this now. We're still 50-50. Look at your window of opportunity. It's that big. If you got a reversal bar right now with no divergence, how would you feel about that? What do your rules say? You know, Sam, it's funny. We talked about this pullback. We talked about there being the tail end of momentum on the 13.2. The smalls had returned to the large. We talked about a loss of momentum on the 5.1. We talked about the small triggers back up inside of the large. And even in the classroom, we said, what were the advantages that we're giving away on this one? And we collectively decided that it was momentum and a clear path. So you were asking me what I felt about it after we had already talked about it 100%. Guys, I don't tell you whether or not you should get into a trade. All I ever talk about is what I see. If that corresponds with a trade that you're thinking of taking, it's not me telling you to take a trade or not take a trade. But I believe the phrase in class was, how many advantages are you willing to forfeit to expect a winner? Does that make sense, Sam? Divergence right there, plain as day. Small triggers working their way back inside the large. It's a universal look. And in the moment, Sam, because remember, brand new, simulator, take it, manage it. Sam, when you go back and annotate this chart, I want you to point out this trigger look on the 13.2, and I want you to compare it to the best. I want you to point out strong triggers on the 5.1, compare it to what you had, losses of momentum. Does that make sense, Sam? You're right where you need to be, and you're on a great path. You should be picking off every trade that you think is a trade, but make sure that you're annotating that chart. Make sure you're talking about the advantages and the potential disadvantages. I love the path that you're on. Use that simulator for all it's worth. Gave some back here. A bit of a mistake taking this one. Right on the edge of triggers inside. Divergence, 50-50. Do you see it, Sam? Everybody's going to make mistakes. Paul, you also had a reversal bar from the outer band on that 13 range. That's huge. Yep. Guys, I love the process. Embrace it. If you're brand new, if you're on demo, remember your job isn't to be a brand new trader that's making just a metric butt ton of money. Your job is to understand that we're here for 15 hours a week to give you feedback on everything that you do if you'll just have the courage to post it in the room. We've got a tech department that is 100% committed to keeping you running smooth. The CEO of the company is 100% accessible with 27 years experience and loves to come in and talk to you guys. I don't know if you guys knew this yet. Assuming his COVID stays in check, John Novak's going to take this class on Friday. John Novak's going to do a high-end market flow class for you guys, and he's going to talk about how it relates to the high probability trend trade, how it relates to a medium probability trend trade, how it relates to termination conditions. I'm just giving up my microphone for a day, Paul. I'm going to trade and I'm going to listen to the lessons. I'm going to be a student. I told John, and guys, correct me if I'm wrong, it's kind of a big deal when he jumps in here and talks, isn't it? I think it's amazing. I've been to seminars where John Novak's presenting. It's a huge deal. I know, right? Day off. I'm sure it'll be snowing and rainy and nasty here in the Pacific Northwest, but that's okay. 2 more months, Ron, and then I'm going to be swapping weather reports with you and not being jealous. Jose, I am in McMinnville, Oregon, just outside of Portland. It is absolutely beautiful up here. Unbelievable. But it's tough to find a sunny day. When there is a sunny day, it's amazing, but they are separated by 15 dreary rainy days. I'm a sunshiny kind of guy. So new users, demos. Guys, if you're still on demo, all you're doing now is you're evaluating how we teach the software, how we teach you to read the software. I hope that if you've been in my class more than a couple days, you understand that we're committed 100%, that my goal is for you to become successful, that your goal should be to participate until you are. Jump on board. Play with us, guys. It's fun. Become one of us. Start your lease, buy your lifetime, get in here. And if you're here and you're looking for consistency, if you're really trying to fine-tune where you're at, guys, it starts with a plan. It starts with having those rules, keeping it simple, focusing on the best of the best, recognizing advantages, and then building your plan from that foundation. And I'm here to help you build your plan. 100%. All you have to do is post in the room. And guys, I think that's it for me. I'm going to run to the Portland airport. My oldest son is flying in to hang out with me for a couple days. So y'all have a great afternoon. Study hard. Do some market replay. Have a great time. Absolutely. Christina, great job posting your first picture. It looks like you're already on a great path. So keep on it, okay? Guys, keep posting. Keep asking. Make up questions. I don't care. Be stingy with your time. Be stingy with your education. Pretend like you're the only person in this room, because when you ask a question, you are. Guys, I appreciate you. I will see you tomorrow morning. Awesome, Ronald. I love to hear that. You guys take care of yourself. Remember, if you take trades this afternoon, take pictures. Show them to me tomorrow. I want to see them. I'll see you guys in the morning. Be good, everybody.